Hey, how's it going, everybody? Kenny here, and today we have a very special episode for you. We have the Chairman, President, and CEO of URG, Mr. Jeff Klenda. So Jeff is definitely one of the foremost thought leaders when it comes to uranium in America. In fact, URG is one of the cheapest producers of uranium, if not the cheapest producer of uranium outside of Kazakhstan. That said, we do go over a bunch of macro conditions and just our thoughts of the industry in general in the upcoming years. And to kind of set this up, at Redcliffe, we're a very data-driven company, data-driven research firm. And that said, we were looking at uranium and we did notice a spike or anomaly, if you will, in the level of sentiment when it comes to uranium. For all those reasons, we definitely took a look and did a bunch of due diligence. One of the companies that definitely hit the radar was URG, which is URG. And so without further ado, let's go ahead and get into the interview. All right. Thank you so much, Jeff, for taking this call on behalf of Redcliffe Research. Appreciate it so much. So we did look at uranium as a whole, the macro conditions overall, and especially with the new administration, transferring from the energy working group and kind of trying to figure out what's going on with that. And, we did look at some of the new March 25th, there was a gentleman, I don't know if you were aware of the Uranium Producers of America, Mr. Scott Melby.
Oh yeah, we're members.
Okay, yeah. Of course you are.
And I know Scott very well. We're a small fraternity, you might say.
Yeah, and actually, that's kind of probably where we could start. So, at first, could you just kind of introduce yourself, kind of talk us through how you got into uranium and why the uranium business, if you would?
No problem. My name's Jeff Klenda, and I'm the chairman and CEO of URG. We started URG in 2004, so we just marked our 17-year anniversary. And I don't mind saying we spent probably 8 years of that time as a permitting and licensing story. It takes a long time to get approval to build out a uranium processing plant, but we finally received that in October of 2012. We spent the next 9 months building out the plant, and we built it out on time and on budget, which is a rarity in mining industry. We spent the next couple of months commissioning the plant, and we started production in August of 2013. Since that time, we have consistently delivered into our contracts, and one of the things that makes our company unique is that throughout that entire time, we had contracts right up until May of last year when we delivered into the very last of them. We've never missed a delivery. And the way I got into the industry was, quite candidly, I was serving as a board member on 3-4 different companies, all Canadian companies. And my partners decided that we really needed to be in the uranium business. I really didn't have any desire to be in the uranium game and didn't know much about it. But they convinced me that there was a substantial supply-demand dislocation coming and that it would be a great and very opportunistic place to be. So I acquiesced and agreed to go onto the board for 2 years, and now 17 years has gone by, and so now I'm chairman and CEO. But it's been a bit of a wild ride, a lot of ups and downs, but we're a critical industry, and we play a critical role in it. We're right at the front end of the fuel cycle, and we provide yellow cake to the converter, who then provides it to the enrichers and fabricators. So we provide fuel to the U.S. domestic nuclear power energy grid.
That's awesome. So yeah, I was actually discussing with somebody, my previous CTO from my other company I co-founded, and we were talking about how uranium is actually like one of the most, very restrictive industries when it comes to regulations, politics, really just trying to understand that piece. And just casually talking, we're like, this gentleman, Jeff Klenda, is doing this on hard mode. If he would have started up a tech company, I don't know, God knows where it would have been. But the money is flying over here. So talk me through what I would like to ask is, from my small people to the industry, what I see is, an industry right now that's kind of obviously reemerging post Fukushima, but it looks like it's an industry that takes equity raise in pieces, and then you survive for a little bit, and then you equity raise again, and you survive a little bit more. Is there going to be ever an end to this? Is this the turn of the corner? Kind of take me through your process, if you would, Jeff.
Well, there has to be. And one of the things I'd have to go back in time just a little bit, and let's go back to Fukushima, which, by the way, we just marked 10 years since Fukushima occurred on March 11th. And what people seem to forget about that time was that actually for almost a year after Fukushima happened, spot prices stayed stubbornly high. They stayed up in the $55 to $60 range for an entire year. We didn't sit on our hands. We decided that it was a good opportunity for us to put contracts in place. So we put contracts in place all the way out through 2016, 2017. Then when we got into 2013 and 14, we decided, look, this thing could last a little longer than we think it's going to. We were averaging more of just about $65 per offtake on our contracts. So we decided to put about 600,000 pounds, about 60% of our potential production, under contract through the remainder of the decade. So it has kept us in a position where we've had cash flows during that entire time. 4 out of the last 5 years, we've been cash flow positive. So we've been fortunate in that we haven't had to live equity raise to equity raise. So this recent financing that we did just a couple of months ago was the first financing that we really had to do because we did not have contracts to deliver into. So we need a new contracting cycle to begin. The whole industry does. And so we're waiting for it just like everyone else. But we feel that that's coming. I firmly believe that the supply-demand fundamentals are indeed turning. I think we have hit that bottom. And I think the thing that needs to be understood and that your listeners should keep in mind is that we are now in our 3rd year of a 50+ million pound per year structural deficit. This is an industry that consumes upwards of 180, 185 million pounds per year. But over the last 3 years, we've been in deficit to the tune of 58 million in 2019, roughly 55 million in 2020. And this year in 2021, probably somewhere between 55 and 60 million pounds again. So the above ground inventories, the secondary supply is being consumed, and it's being consumed very rapidly. So I think that, yes, I think that the turn is coming. I think that we're at that inflection point now. I do believe that we're going to see the utilities coming into the market in the second half of the year. And then, of course, we also have the strategic uranium reserve, which the United States has now allocated and appropriated dollars for 2021. So we think that it's entirely likely that we will be able to deliver into the uranium reserve as well before the end of the year. So that was our first raise where we had to go to an equity raise just to have cash in the coffers without contracts to provide that income. And I hope that with the new contracting cycle that I think is right around the corner, I hope it'll be the last one.
Yeah, and then so the other thing that I'd like to mention to the viewers here is you are very generous to your shareholders in terms of share dilution or taking that equity raise. Not so much comparatively to your competitors. Can you talk us through how are you able to just not do it when everybody else seems to be so adamant to do it?
Well, first of all, let me just make a comment. I'm the largest shareholder in the company, and that's by virtue of the fact that I've purchased all of my shares. Unlike a lot of CEOs that have millions of shares in their company, but they paid a fraction of a penny per share for them. I guess I wasn't smart enough to do that. I've actually, since I started this company, I've always felt like I needed to eat my own cooking, and that I needed to be someone who was consistently in the raises that we did. So I was always a purchaser. But the thing that has enabled us to avoid dilution has been the fact that we've had contracts in place. At the time when we were first putting our contracts in place in 2010, 11, 12, and 13, through those years, we were able to consistently add additional contracts to the book and make sure that we had cash flow during that time. And as long as we had cash flow, we didn't have a need to go into the marketplace and dilute our shareholders. So yes, we did have a couple of raises during that time, but only because our cash flows were a bit lumpy and they were a little inconsistent. So we'd have to go in and raise a small amount of money. But yes, overall, no one has been able to avoid excess dilution better than we have. We've done a great job of it, and that's something that I'm always mindful of, and that's because I've got $3.5 million of my own money in this company, and so Talk about having my interests perfectly aligned with those of my shareholders. Mine indeed are, and so I'm very stingy with a share.
Yeah, and the other thing that I was super interested in when I found out that you renegotiated some of the interest rates with the bank, I think interest only, if I'm correct, and just giving yourself some more runway there. I mean, obviously everybody's waiting for that new contracting cycle, but yeah, that is super awesome. I just like to mention that because I know our viewers, when we talk about the CEOs and thinking about like who's leading the company, we always want to think about, like what are they doing? What's unique about them? Everybody can do the basic thing, but what can they do that's outside of that?
Yeah, we did a good job of renegotiating that. That was with the state of Wyoming, by the way. That's an industrial revenue bond. And so we don't have another principal payment on that now until October of 2022. So we have bought ourselves a lot of runway. We currently have about 18 million in the bank, and we have inventory. Since we were able to buy material in the market when prices were really low, down in the low 20s, I was buying material at $21 a pound, delivering it into $50 contracts, wow, scraping a $29 delta and keeping my pounds in the ground or keeping them in inventory. So we actually have about nearly 300,000 pounds in inventory, which at current prices is about $8.5 million. So between cash and inventory, we're in very good shape, and we've given ourselves solid runway. If everything just stayed the same, I wouldn't have to raise money until early 2024.
Wow. That's exciting to hear. Yeah. And then the new mine itself in Wyoming, that one, I guess the yields are really good on that one. Can you kind of talk us through that?
It's been fantastic. And, look, everybody talks about what, they're going to have great production and it's going to be very low cost production. The harsh reality is that you just don't know until you turn on those pumps. And you can have the best lab testing that indicates that everything's going to be fantastic. But the reality is that there's two things that you absolutely must have in the in situ recovery of uranium. And one is that you've got to have excellent flow. If you can't flow it, you can't produce it. And the other is you've got to be able to dispose. You have a small amount of liquid that is toxic, that comes off the process, that needs to be disposed of. We dispose in deep disposal wells, and you have to be able to have disposal. So you need those two things. And we've just been very fortunate from the first time that we started production. Commissioning, of course, first 2 months are a little rough because you're trying to get used to the well field and familiarize yourself with the flow rates and everything else. And so that was a little rough, but we could have produced 5,000-6,000 pounds a day with the way we were flowing right from the outset. And Lost Creek has just proven to be a beast. And we say this in our PowerPoint, and we firmly believe it. We believe that we are the lowest cost producer outside of Kazakhstan. And Kazakhstan, as you know, is the largest producer in the world, producing about 45% of the global primary production. It's the projects there are about half owned by the Russians. And so you have the Russians that are very prominent in our game, and as are the Kazakhs. So I think that saying that we're the lowest cost producer outside of Kazakhstan is really saying something. We are indeed one of the lowest cost producers in the world.
So, that's a good time to kind of shift and talk about Kazakhstan. So, most of the folks in my company and my data analytics company that I own are very national security driven for many different reasons. But we all have about, almost 4 decades of special operations experience altogether. And so we have dealt with disinformation, especially from the Russian space. We're definitely digging into the NDS and the NSS consistently. The one thing that I'd ask, though, like from where you sit and from the politics that are at play right now, and we can have all these energy working group committees and all these other things, but what is it going to take to impose cost on Kazakhstan, understanding that they deflate their currency to try to make it even more lucrative for them, and understanding that there's kind of Russian cohorts kind of working through that entire cross section of uranium. And if you look at the graph, we have, in my opinion, have lost, I don't want to say thought leadership, but in terms of like having a seat at the table when it comes to energy, in terms of uranium. How do we turn that corner? And what is the question that we need to ask, like our politicians?
I couldn't agree more, and I'll tell you, your listeners may or may not be aware of the fact that 3 years ago, we initiated what was called a Section 232 trade action, in which we attempted to impose a quota on the domestic utilities. Look, we're in a position right now where we are getting 100% of our nuclear fuel from outside the United States. That is, let's just be nice and call it questionable energy policy, but it's just absolutely insane national security policy. And especially when you're getting roughly 50% of your nuclear fuel. Keep in mind, nuclear is 20% of our base load. It's 20% of our grid for electricity here in the United States. And it's 55% of our carbon-free emissions. And yet we are right now dependent on Vladimir Putin and his confederates in Kazakhstan and Uzbekistan for roughly 50% of our nuclear fuel. If there were to be a disruption for any reason in the flow of that material coming into the United States, our utilities would be in crisis literally overnight. You'd wake up and spot wouldn't be at $30. It would be at $60 and climbing. Our stock wouldn't be at $1.10. It would be at $3 and climbing. And this is something that's very, very likely. As you mentioned earlier, uranium is the most highly politicized commodity on the planet. There's no getting around that, more so than gold, more so than rare earths. And so as a result of that, it's entirely plausible that it would be weaponized. I mean, we have watched Vladimir Putin since coming into power in 2000. We've watched what he's done with natural gas and oil with Western Europe and Eastern Europe. He'll cut off the supply, and he will use that as a political weapon whenever it suits him. You know, he actually has come out in the past and said, when we've imposed additional sanctions on the Russians, he has said we will not use nuclear fuel as a political retaliation for sanctions. His words, at this time, meaning we reserve the right to, but we just got finished imposing more sanctions on the Russians. They have said that they're going to retaliate. One of these times, I just don't know what it's going to take. Is it sanctions that finally causes Vladimir Putin to say that we're not going to deliver any more nuclear fuel to you? Is it because a hot war erupts in Ukraine? Now you've seen the forces massing on both sides there in the Donbas and the Crimea areas, and that would be absolutely insane for Ukraine to do that. And here now we're hitting targets in Syria, and Iran is enriching to over 60%. So there are a number of hotspots around the world. It's entirely possible that Vladimir Putin would decide that he would use that as a reason to deny material to the West, and we're foolish to become this dependent on this individual and his confederates for our nuclear fuel when they are so important to our grid. Look what happened in Texas. I mean, in Texas, you saw with the ice storm, the wind and solar both just shut down. Were it not for nuclear, hundreds more of Texans would have frozen to death during that ice storm. But nuclear was consistent and stayed up and made sure that the lights stayed on. Wind and solar couldn't do that.
Yeah, and not to mention that we have the largest nuclear fleet in the world. So there's also that. That's a national security consideration for sure. So I just want to draw some parallels to like kind of what the semiconductor industry is kind of going through right now. And as you know, there is a shortage, but we're starting to really realize that, you know, this is a national security crisis as well. You know, let's build some foundries here. Let's have some ownership. Let's have some stake in whether or not, you know, i.e. China can even create these kind of monitoring surveillance chips because, you know, as semiconductors get smaller, you know, we'll lose the right to even surveil or create the things that we want to create. So let me pivot and kind of draw a parallel to uranium. You know, recently they brought in Intel, Qualcomm, a bunch of other folks, TSMC, of course, and you know, to the White House and talk through that kind of pretty elaborately. Is there a forum that you would suspect is working through that? Who are the thought leaders in that space right now? Who do we need to be petitioning and thinking about reaching out to in terms of our politicians? Is it Barrasso, or who would you think would be able to make this change?
Well, Barrasso has been our primary champion. There's no question about that. And so has the rest of the congressional delegation from the state of Wyoming. We have others that are, like as Senator Gosar and Manchin, that are people that will consistently support us. But one of the things that I'm happy to see is that we are seeing greater bipartisan support. Mm-hmm. I really was not expecting this kind of backing from this administration. It's been a pleasant surprise. So far, they've said all the right things. And there are industry groups, like you mentioned earlier, the Uranium Producers of America, but then in addition to that, the Nuclear Energy Institute, the NEI, the World Nuclear Association, WNA, and then, of course, you've got other organizations as well throughout the world. But, the fact is we've got to be better advocates for our own industry. We fight a lot of bad press that has come about as a result of Fukushima and other incidents like that. And so that's something that we still have a ways to go to overcome that. But I think that we will. I mean, and let's face it, it helps when you've got guys like Bill Gates getting on 60 Minutes and doing op-eds in Politico and getting on CNBC and saying, uranium absolutely will be in favor again. We absolutely must have it. And, with the advanced reactors that are coming online, these are the big ones. But then in addition to that, you've got the small modular reactors, the micro reactors, which will be used heavily for military purposes in addition to remote location use. But there are plenty of advocates for us right now. And the one thing that I am very pleased about is that for the first time in years, we are seeing strong bipartisan support. So I think everybody realizes that we're just not going to get it done. I mean, coal's going away. Oil and gas, I mean, the first thing that Biden did was he put a moratorium on fracking on federal lands, and then he shut down the Keystone Pipeline. So clearly he's not an advocate of those type of carbon emissions. So what does it leave you with? It leaves you with renewables, and it leaves you with nuclear. And I like the fact that at least they're coming out right now and saying, yes, we do have the largest fleet in the world, and we can't allow any more of these to shut down. We've got to keep them up and running until the new technology is out. And that's going to be just over the next couple of years.
And so then I want to ask, what are your thoughts on kind of the Biden administration in terms of being good stewards of the energy working group? Is there kind of a narrative reframe there to kind of have so they can take ownership of it? Is there, what are your thoughts on the energy secretary as a whole? You don't have to answer this if you don't want to, but to get your thoughts on it.
As a matter of fact, I think the thing is that it's important that people understand the progression. Look, I am personally responsible for Section 232. I started it, and that was after a meeting with then Secretary of Energy Rick Perry. And after we met with him, I just looked at it. I said to him, I said, "Do you want us to bring you a 232?" And he said, "Bring me a 232." So we did, and we were not successful with it. 18 months later, when Donald Trump finally had the decision that had to be made, he hadn't read the report, quite candidly. Yeah. And so that led us to the Nuclear Fuel Working Group. Well, the working group was supposed to come back with recommendations for the entire industry, not just the fuel cycle, but they're supposed to do it in 90 days. Instead, we got it just almost a year ago. It was on April 23rd of last year that we got the final report from the Nuclear Fuel Working Group. And it's interesting because there's probably 20 items that are recommendations that came out of that report. And there's a solid list of them. But it's interesting because if you take a look at those 20 items, I would say at least 12 to 13 of those items are now incorporated in the Biden green energy agenda. So it has had an impact. 232 led to the working group. The working group has led to the clean energy agenda of the Biden administration. So the fact is while we may not have gotten what we wanted from the Section 232 trade action, it has become part of the national dialogue and the narrative around clean energy, and it is a big part of it. In fact, I was just provided this the other day, and it's literally a list of the legislations that are all pending in Congress right now that have to do with clean energy. And So there's a lot of action on this front. And I think that the Biden administration is going to end up being very good for nuclear. It was surprising to me, but I think they're going to be very good to nuclear.
Yeah, just to touch on your point about Bill Gates and the like. So my data analytics firm does a lot of sentiment mapping, and that's actually indeed how we found out kind of uranium was becoming of more interest to just shareholders in general and retail investors, and so we kind of followed the trail and definitely have a decent stake in your company as well, and some of the other uranium folks. So then, I want to pivot to talk me through how scarce it is for folks that are actually working in the U.S. markets. I gander that there's maybe less than a dozen actually competing and doing the things that would make uranium. So can you kind of speak towards that? I feel like it's a rare unicorn at this point.
Well, it is. And look, back in the original uranium renaissance, which almost seems like a punchline at this point, back in 2004 and 2007, we really saw the number of uranium companies increase because a lot of people saw those shortages coming. Now, obviously, that was all derailed by Fukushima, but at that time in 2007, there were nearly 600 uranium companies in the United States. And so now we find ourselves in a position where over the last 10 years since Fukushima, that number has shrunk to now there's under 60 companies. And the reason there's even that many is because most of them are really micro-cap explorers out of Australia and Canada. They're probably, and I'll say this, I would say there's less than 10 or 12 companies that anybody that I would think are even worthy of investment in this entire industry. And of those that could actually be suppliers to the United States, especially to the strategic uranium reserve, which requires domestically produced material, I would say there's probably only 5 or 6. And there's only 2 of us that are still considered to be producers left in the United States. And so there's only 2 of us that are left that are still producers. And there's maybe another 2 or 3, perhaps 4, that could end up being producers in the next 4 to 5 years. So that is a very, very limited number. So we like the position that we're in, having inventory. We're able to deliver into the uranium reserve as soon as they want that material and as soon as they're ready to go out for bid on that material. So we have that ready to deliver. There's only 2 of us that are still producing. So we're proud of the fact that we've been able to weather these challenging times. And we stand ready to do what it's always been our business model, to be a good, solid, reliable, low-cost producer of yellowcake to the domestic uranium industry, to the domestic nuclear power industry. And that's exactly who we are.
So I'm going to ask a really specific question, and feel free to punt if you don't want to answer this. But, in terms of like poundage per year, what is that number? What is the number that turns the corner for the industry? What is the number for you? In terms of just like, actual, goods to market,
Yeah. Well, for us individually, I think, first of all, if you go back to the Section 232 trade action, one of the arguments that the utilities used at the time was saying, look, these guys couldn't even really ramp up to much above, say, 10 or 12 million pounds per year. The fact is right now in the United States, we have infrastructure that's capable of producing upwards of 22 to 23 million pounds per year. Now, the EIA division of the Department of Energy will put that number up at around 36 million. Fact is, when you look at it in terms of project by project and infrastructure by infrastructure, you come to a realistic number of about 22 to 24 million pounds could be produced here in the United States. But realistically, over the next 5 years, I think it's more realistic that we could probably ramp up to about 12 to 15 million pounds. And for our company in particular, we've always said, the thing that separates us from the other players in the industry is that we can ramp up faster and at lower costs and less dilution than anybody else out there in the marketplace. I can get to 1 million pounds per year run rate and sustain it and do it in about 6 months. And at Lost Creek, that would cost me about $15 million. To add in Shirley Basin, to add another 750,000 pounds and get up to near that, right at that 2 million pound per year run rate, would take me about 18 months. So total about $40 million, $25 million at Shirley Basin, $15 million at Lost Creek. But if you use that as a benchmark for everybody and say, okay, what would it cost to get to 2 million pounds per year? I know what that number is. That number is about $40 million time frame, about a year and a half, and I can sustain it for many years after that. So there's no one else in the United States that can get there that quickly and do it for that small amount of money, and I believe do it with less dilution to their shareholders. So I think we're in a very unique position. I wouldn't trade places with anybody.
That's what I like to hear, Jeff. So to lean into that a little bit more, is that that $40 million, is that like CapEx spending or just getting more employees or more? You know what I mean?
It's everything. That's everything all in. That's ramping up the people we need. Although keep something in mind, one of the things that also distinguishes our company is that we have kept our operational staff on. And this is a real issue in our industry because, 6 years ago, I had over 90 employees. Today, I've got 18, but 10 of them are out at the plant. And these guys are the foundation on which I will build the plant and ramp up when that time comes. So we're at the ready. We're just waiting for the green light. We'll step on the gas and go. And so we're one of the few companies that actually has personnel on staff. So when we talk about, well, it'll cost me $40 million to ramp to 2 million pounds a year, that's ramping up personnel. That's the additional materials that we need. That's all in CapEx. That's everything. That's an all-in number. So and when it comes to mining, that's actually a very small number. That's a pittance compared to other forms of mining, and particularly conventional mining, because as solution miners, our CapEx goes in up front, and then after that, it's all operational expenses after that.
And then, with the new reactors coming up and the modular reactors as well, is that demand already forecasted kind of within your growth, or has it not really triggered that calculation yet?
Well, we know what we're capable of doing, and we know what we can ramp to not only in the next 2 years to 2 million pounds a year, but we think that we can get higher than that over the next 4 to 5 years if we bring in our lost soldier properties. So we know what we're capable of doing. As far as the industry is concerned, if you take a look at that deficit, that 50 million pounds per year structural deficit that we were talking about, that just continues to grow in the years to come. And when you take a look at those deficits, I got to think that the guys that are doing the numbers crunching on that, WNA and NEI and others, that they are taking into consideration the small modular reactors and the advanced reactors that are going to be built. I mean, keep in mind, there are 55 reactors under construction globally right now, and we're going to see 12 to 15 of those come online this year. So we're going to see an increase in demand this year for that reason.
And then, if you wanted to ramp up to that 40 million price target, do we have? I'm sure you have capital funding options in place. I'm guessing already, or like what would it take, or would we look at shareholder dilution, and is that the right call, or what are your thoughts on that?
Well, my thoughts on that right now is that I wouldn't. I may do if the price is high enough on our stock. If our currency is high enough in the marketplace, I would raise more money opportunistically. But the fact is that, keep in mind, we've already been producing for the last almost 8 years now. And so for us, if we get contracts, those contracts are their gold. I mean, we can use them as collateral in debt financing. I've already set up that debt financing. And it would be with large first tier lenders. It wouldn't be second or third tier lenders. It'd be first tier lenders. We'd be able to negotiate very favorable terms for the company. So more than likely, we would go ahead and we would borrow to ramp up and then pay that off with the revenues from the new contracts that we would have in hand over the course of the next 2 or 3 years that followed. So I'm always going to be mindful of dilution. And so that's why I say that I'm confident that we can do this. I mean, when you look at it, when we built out our processing plant in 2013, We ended up doing a variety. It was a combination of equity and debt, but I only issued something like 7 million shares throughout that entire ramp up to build out our processing plant. And so it was, I'd like to think, the smart use of debt to get that done. And now we still have a little bit of that left. It's not much, but we didn't hurt the shareholders in that process.
Yeah. And you know, kind of talking about you know, employees. Let's kind of go back. I know we kind of glossed over it. Did the pandemic hit you guys really hard? I know everybody cut a lot of costs, a lot of corners, but I think structurally a lot of companies like yourself might have came out on the other side of this being hyper efficient. I'm just guessing, just speculating, because you know a lot of the folks that I talk to that have turned the corner and survived are very lean right now. Which is really great for the company in terms of growth. So, kind of talk me through that and kind of maybe how you see this ramping up, or what kind of flavor of growth looks like.
Well, we said, you know, unfortunately, over the last 6 years, we've had 5 reductions in force, and so that's been painful. And especially at the last couple, we were saying goodbye to people that had been with us for 10 years or better. That's very difficult. But I wouldn't attribute it all to COVID. I mean, we had to change the way that we did business with distancing and the way that we managed our shifts out at the plant, and even our commute back and forth to the plant, and how that was handled. But we really were not hit terribly hard by it. But yes, we did use it as an opportunity to cut costs. I mean, as prices have remained stubbornly low during the last several years, we've been in a position where we just simply, we've worked very hard to cut costs in every one of our departments. We are running as lean right now as we have at any time in the last 15 years. So that's why we have runway based on the money that we have currently in account and the inventory that we have. That's why we have runway that'll take us all the way to 2024, because we have cut things. We've cut to the bone. We've done a very good job of doing that. And when we do ramp up, like I said, I've got the 10 guys that have the best skill sets, the broadest base of skill sets, and they will, like I said, serve as the foundation for the other guys that we then bring in. We're able to actually hire hourly laborers and have these guys train them into the positions then. So I don't have to go out and find the experts in the industry. That there's just such a paucity of very good technical people in our industry, and it is a highly technical job in almost all elements of operation of an in situ recovery plant. It takes highly technical people to do that. So we've kept that core, and we'll build off that core when we're ready to ramp up.
So Jeff, I know we're coming up on time here, but I do got to ask you like 1 or 2 final parting questions. And so I want to definitely be respectful of your time. So the thing that I want to know is, because, you know, anytime I talk about folks in my industry, so I think the uranium problem for me, for my little peephole, is a national security problem. It really is for me. And I think there's a big cross section that needs to be fed into, and some allies that we need to go opt for y'all. So looking at that and thinking about those things, and this could be anything, but I need to ask you, like, since you are the expert, like, what am I not asking? What should I be asking you right now that I just completely missed?
Well, I don't think that you missed much, and frankly, I think that when we made the discussion of, or we covered the discussion of what is the CapEx, but you know, because this is something not everyone's asking right now. How much is the CapEx for you to be able to ramp up? What are your costs going to be? How big is that CapEx? What's the time frame and can you sustain that production? Are you going to be? It's not just about achieving a level of production; it's about sustaining it. Where are you going to get your personnel? I mean, this is not just easy. You can't. These guys aren't sitting at home on a couch just waiting for a phone call, and you can't find them on Craigslist. I mean, you're going to have to really figure out where you're going to get quality personnel, and how are you going to, you know, what kind of dilution is this going to cost me, you know, as a shareholder. So I think that we've covered, you know, the hard questions and the questions that nobody's that nobody's asking, but more people need to be, and that's really, I think that's there are critical questions out there. And the other one is with respect to national security, why this isn't a bigger issue to more people in this country, because it really ought to be. I mean, this should be something that is a greater issue that more people should be paying attention to, and we've got to do a better job of it, because we're losing our seat at that nuclear table, and we can't afford to do that. This is something that's too critical to the security of this country, and we can't lose our seat at the nuclear table, and we cannot cede that technological primacy to the Russians and the Chinese. We simply cannot afford to do that. And yet we're in danger of doing that very thing. So we're very hopeful that the rhetoric that we're hearing from the Biden administration turns into solid action, and that we get a larger appropriation for next year for the strategic reserve, because it's desperately needed.
Final thought, infrastructure bill. I know it's leaning really heavily into clean energy and all this other stuff. Where does it put you guys now that we know what the numbers look like?
There's some good stuff in there for energy overall, but what we really need is we need to see reintroduce the American Nuclear Infrastructure Act. That was introduced in the end of last year, but they did not pick it up before the end of the year, so it has to be taken up by the new Congress. This is one of the things that was on our agenda when we had our call with the Nuclear Energy Institute last week. And that is something, the American Nuclear Infrastructure Act is something that needs to be reintroduced, because it deals specifically with keeping the existing fleet in place, not letting any more plants close. It deals specifically with the fuel cycle and making sure that we have a functioning fuel cycle that includes mining and conversion and enrichment and fabrication, the whole fuel cycle. And then finally, it even introduces credits for the utilities for buying domestically, which is a good incentive for them to do so. So we need that. We need not only at least a good part of that infrastructure bill to be dedicated to energy and the right kind of energy, but we need the American Nuclear Infrastructure Act to go through as well. And that needs to be reintroduced into this Congress.
Great. So that's something we definitely need to be watching for and pinging our congresswomen and men about. Jeff, thank you so much for your time. This has been so informative. I learned so much. My
pleasure, anytime.
Yeah, and just enjoy. Are you in Denver, Jeff? That's that?
Yeah.
No, okay.
Just outside Denver, Golden, Colorado, the home of Coors beer.
The silver bullet, American legend.
That's right. Our claim to fame. That's it.
Thank you so much. That's all I got to say. Appreciate you.
Great. Anytime.
Thanks.
Enjoyed it.
Yep.
Thanks, Kenny. All right.
Thank
Cheers.
you. Bye.
Bye.